me talk a little bit about ETFs, the rising stars. And being in a position where we are today at Selftrade, we get to hear from many of our investors and customers about their interests in ETFs. So what I want to try and do today is tell you a little bit more about ETFs and how they might play a role for you within your investment portfolio. But first, a little bit about Selftrade, because we get plenty of customers saying, oh, I knew you 10, 15 years ago. Well, Selftrade's been through a number of ownerships now, and it was acquired by Equiniti just about 2 years or so ago. Equiniti, you may be familiar with if you are a shareholder, because we are one of the largest administrators of share registers in the country. We're also one of the biggest share plan administrators, so you might be an employee of a corporate, and it will be Equiniti that does most of the administration of that. But Selftrade effectively is an investment platform. You can buy and sell stock there. You can trade ETFs. You can hold gilts through it. You can put them in wrappers such as ISAs and SIPs. And from our perspective, it's a completely online process, but supported by human beings, which is very important to us. So we have a large contact center in Birmingham to make sure that we can assist that digital experience. And broadly, we try to make sure that it's a very personal service to our customers out there today. But if we look at ETFs, there are two key challenges that are being faced by investors. One, the cost of investing. And two, just navigating through the complexity of it all, trying to figure out where you're going with your portfolios and your investments. Now, ETFs in themselves are really a US phenomenon. If we look at how the ETF market in the States has grown over the last few years, we can safely say that there's around about $3 trillion of assets in ETFs. And in the last 12 months, there has been over 130.7 billion of funds outflowing from mutual funds in the United States, and oddly, around about 240 billion flowing into ETFs. In the UK today, it is a fledgling market. The institutions have been using ETFs for quite a considerable period of time. But in terms of retail investors getting involved with ETFs, we have seen at Selftrade over 230% growth in the usage of trading in ETFs in the last 12 months alone. So one of the phenomena that you have with ETFs is you can buy and sell those exactly as a stock. It's not like a mutual fund where if you ring up or you go online to buy a mutual fund, you're always buying for the next available price that gets set. An ETF actually trades in the marketplace. So there is a given buying price and there's a given selling price. You always know what you are going to get. And they trade exactly the same way as a stock. So you pay a flat rate of commission, if you're dealing through Selftrade, to buy an ETF. The other thing that is typically important about ETFs is that they mimic very closely an index. So if you ask any of the fund managers here today how well they have outperformed their benchmark index, it'll be a telling response that you get. Unfortunately, last year, only 25% of the UK mutual fund managers managed to outperform their benchmark index. And one of the reasons behind this is it's getting more and more difficult to outperform. If you're investing out there yourselves and you're investing in stocks and shares, hands up anybody that's had losses in the last 12 months. We don't talk about those. How many of you have won in the last 12 months? Yep, plenty more of you. That's good. And that's really important. But if you're trying to do as well as the market, an ETF is the easiest way to get the replication. The FTSE All Share, the Euro stocks market, etc. You can buy an ETF that absolutely does what it says on the tin. It replicates what an index is doing. But more importantly, we've started to see sector ETFs come in. So if you've got a real interest, it might be pharmaceuticals, and you want to track the pharmaceutical sector, you can do that. And therefore, for the more sophisticated investors, you might want to start considering how you can actually diversify the risk in your portfolio by using low-cost ETFs. Typically, ETFs are charging a fee, an annual management fee, of in the region of between 2 basis points up to around about 15 or 20 basis points for more sophisticated types of allocation. Compare that to mutual funds where you're paying considerably more to get the benefit of active outperformance. But certainly if you're considering diversification of risk, it's worth looking at an ETF to see the way it can play a part in your portfolio. It might be that you want to get overseas exposure, but don't know which stocks to buy. It might be that you like a sector and you don't know which stocks to buy, but you think the index is going to go in the right way, in which case look at an ETF that is comparable. And therefore, if you start to look at the asset classes, I don't know how you see that at the back of the room, but actually what it basically looks at is the spread of returns on different sectors or asset classes of investment over the last 16 years. And as you can see here, it's going to be very difficult to pick whichever asset class is going to be in the ascendant. The really nice thing about some of the ETFs that we're seeing coming to market now is that they do that for you. So you're actually getting a bit of active overlay where a fund manager is using the ETF as a vehicle to get exposure to the benchmark index, but is overlaying that with saying, well, okay, we want to be overweight in certain sectors because they take a view. And for that, it's still far more cost effective because the underlying vehicle that they're using of ETFs does better for them. So I think the key thing here is if you are a sophisticated or intermediate investor, look at ETFs as a way of diversification. But for new investors coming through, for those people in the room that are just getting started, if you want to buy an investment to get going, look at something in the home territory. Look at something like the FTSE All-Share and find an ETF that does exactly that for you and gets you going. It's probably the lowest form or cost of form investment to get going in the market today, and it's a great starter if you're looking at starting out in ISAs. So how can Selftrade help? Well, the stand's there today. If you want to go and talk to any of the team, they're there to help you. We will be launching next month the best 100 ETFs list. So we've been working in conjunction with a research team to actually look and analyze the best 100 ETFs that are available in the marketplace. We'll put that information out live next month. One thing that's really interesting coming out of this survey, it's not the cheapest ETFs that have done the best in terms of replicating the index. Any member of the team will be able to talk to you a little bit more about that this afternoon. It's one to watch out for. The cheapest doesn't always mean the best. But we'll be putting out the 100 ETF best performing list next month. We've also taken into account liquidity, volume, and costs. Because when you're buying or selling an ETF, you want to make sure that there's a market there. And if ever you buy stocks or shares, sometimes you think, well, yeah, why is that bid and offer price a bit wider? Well, that's what the market is doing. It hasn't got enough volume going through, so it's often widening the rates. And that can happen on an ETF. So some of the research that we're doing, that we're publishing, is to actually help inform you about where those volumes are coming from, and more importantly, the liquidity of the underlying ETF itself. One of the biggest criticisms I have of the ETF industry is the naming. So if any of you have bought ETFs, you'll often find there's a name about that long, which you can seldom understand. What we've been doing is working with the providers to try and shorten the names down and make them more easy to understand. So the categorization of ETFs that will be published next month will show how easy it is to understand what those ETFs are actually doing. We'll also be putting out alerts on ETFs, similar to corporate action information, but alerting you to what's going on in the ETF world. And then also providing a matching service to look at very comparable mutual funds. So I mentioned earlier that mutual funds don't always outperform, but also at the same time, we're looking at the ETFs that is the closest match. So in conclusion, we're seeing more call for ETFs being used, and at Selftrade, we'll be launching the tools to help you use them. If you've got any questions, by all means, find us at the stand at the top of the stairs. Thank you very much for your attention. Thank you.